Good afternoon, everyone. Welcome to Hit the Bid here on August 9th. This is Ty Robbie here through Week 32 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 32. So let's jump in and get started. First up, we got our October live cattle on the board. We did see a nice battle here in this cattle market last week. Both buyers and sellers throwing some punches here as this market continues to churn around in the area. Last week, this October live contract did open up with a little bit of resistance here on Monday. However, Tuesday and Wednesday session rallied back up here and took a swing at that 230 level. However, we weren't able to get that acceptance back above that 50-day average like the bulls would want. Thursday's action opening up with a nice little opening range breakdown here. Sellers pushing this thing off at 230 and seeing some follow through here into Friday's session as well. Printing last week's low at 222.75. That's going to be the line to watch here for the sellers in this market. Continued offers down here below last week's low. We'll keep that follow through to the downside going. We should see more selling pressure if we do get down below this level and see this market attack that 217 to 220 area and see if there's any more life down here in this leftover demand zone. If the sellers are able to keep on pushing through these areas, we got this downtrend that still remains intact. We've seen lower highs and lower lows since this recent all-time high at 246.5 back in May. Since then, it's just kind of been some slow, steady downside. More resistance up here at our major averages last week. Sellers are in control at the moment, and we should expect to see some more downside. Continue to be defensive, be selective here until this market can really find its footing. If the buyers want a chance to see some upside in the week ahead, we need to keep Friday's range intact here. We don't want to see any follow through down below Friday's low. Buyers need to put in a higher low here at the moment, gather up some more support in the low to mid 220s. If we can see these ranges tightening up here in the first few days to start this week, buyers should have a chance here to take another rally attempt back up at 230. But until we can get a daily close, preferably on heavy volume back above 230 and that 50-day moving average, the sellers will still remain in control. Buyers need to get a nice strong close back above here before we can start talking about any sort of sustained upside. They do have a chance with Friday's pushback here up to 225.15 into the close last week. With that support we saw late last week, buyers have a chance to try and stage a rally attempt here. We just need to make sure that this higher low is confirmed here, and the bulls are able to get some bids back above Friday's high at 227. Any sort of rallies back above Friday's high should make this market push back up towards 230, sniff that level out once again. And like I said, to get this market rolling to the upside, buyers need to get a nice strong close back above there, and that will give the bulls the green light, and we should see some more upside come from there. But make sure we get a nice strong close either above or below these levels, and that'll confirm the next leg from here. In the meantime, look for this market to continue to battle it out. We got some good lines to watch here, so wait for those bulls to either close back above 230 before we can think about any upside. But until then, be defensive, be cautious here, as we could see a little bit more downside still to come in this cattle market. Next up, September feeders on the board. This market saw some good back and forth action here as well last week, just bouncing around between 340 and 350 all week long. We did see some resistance up here around these averages early on Monday and also on Thursday's session, showing that breakdown off that 350 level and that 50-day moving average. However, we continue to see these yearly range lows hold. This market has found support down here in the 340 to 335 area all year long. Couple tests back here in March and June, offering good support, and so far at the moment the bulls are still trying to hold on to this level, even though it got a little bit slippery here and we continue to see some good choppy action down here. The bulls are still trying to hold on to these range lows. Friday's pushback here in this feeder market was a little bit stronger. We did see some nice gains there on Friday, and good support as it held on to that 340 level. We need to keep an eye on 340 here. Multiple touches last week show there's a lot of inventory, that this market could get heavy if we do get any sort of offers below 340. Look for this thing to slip. If we get some offers down here below this level, we could see another retest of this 333 to 334, 333 to 335 area if 340 breaks down. But at the moment here, we've got some nice shape here, good structure at the moment. Bulls need to continue to push back above Friday's high. 345.5 still remains a important level to watch. Look for bids above Friday's high to get the ball rolling higher once again. Bulls need to see a nice strong push through this 50-day average that's hanging out right around 350. If we can get a nice strong close back here on heavy volume back above this level, that'll open the door to some more upside in this feeder market, and see this thing push back here through the middle part of this range and potentially take a rally attempt back up there at 370. This feeder market is the best looking out of the two cattle markets at the moment, so look for the relative strength here to hold if these feeders are able to continue to gather up some more support and see some buying activity here in the week ahead. Could offer some more buyer support to this live cattle market as well, and give that thing the push it needs to get back above 230 and get an uptrend back on track. In the meantime, though, this market still looks pretty range bound. Look for some more choppy action here and wide daily ranges. Feeders have a chance to post a rally here early this week. We need to see some bids back above 345.5 to get that going. And until then, until we can get that strong close back above that level, continue to be defensive here as this market is still weighing heavy on this 340 area and these yearly range lows. Another note for this feeder market, we are seeing volume start to tick up here in this October contract, so wouldn't be surprised to see this October contract overtake September here at some point in the week ahead. We will continue to monitor the situation, give you the best front month to trade here as we go into the week. But at the moment, September still remains the heavy volume month and the front month here, so continue to focus on that. But that October feeder is creeping up, so just be aware of rollover here in the weeks to come. Next up, December corn futures on the board. Choppy action here in this very directionless market. Not a whole lot to be said here. We did just see some more choppy action here, swinging back and forth across these averages. Really brutal environment to try and be trading this thing. This market has just been pretty sticky here between about $4.50 and $5, and we expect to see this these wide daily ranges and this choppy action to continue here in this corn market. Not a whole lot of directional clues here at the moment. Just looking for some more range-bound choppy action, choppy, sloppy action here in this corn market. So steer clear. There's better opportunities to be putting your money to work elsewhere. This corn market should stay pretty sticky here between about $4.50 and $5. Next up, crude oil prices seeing some more downside last week. This market opening up down here below $80 and seeing some nice downside here early in the week. A little bit of pushback on Thursday, but this market is just seeing failed rally attempts here over the last couple of weeks. We did get a little bit spiky here throughout the early to mid part of July, but at the moment here we did get that breakdown back below 87.5, which was a key level here for this crude market. Seeing some more downside last week, more acceptance of these lower prices. We should continue to see these crude prices continue to slip back down here towards $70. And next up, hot market last week was these equity indexes, seeing some nice strength here across the board. The S&P rallying hard up into a new all-time high at 78.20 last week. Nice strong momentum right out the gate. Monday, Tuesday, Wednesday's actions shooting right up there to that new all-time high. We did see a nice little consolidation here late in the week and a nice strong finish at 77.77 for this S&P contract on Friday. Nice strong finish there, confirming a nice little breakout after a couple months of consolidation here. This market got marked up, traded sideways, got used to these higher prices, and we're seeing another markup here. So this opens the doors to some upside. We should see a nice power trend come from here. Lots of good participation beneath the surface here in our mega cap names, and we should see some more upside. Still kind of a mixed bag with a couple of them, but for the most part, we are seeing some good traction, some good upside, and good acceptance following these most recent earnings releases, showing that these markets are back on track to the upside. The Nasdaq still remains to continues to lag here at the moment, but we did see some good upside here as well last week, rallying back up here towards 30,000. If we can see some good acceptance above 30,000 here, we should see this Nasdaq shoot back up here towards this all-time high and get this uptrend back on track. The Dow did see some good upside here as well last week, printing a new all-time high at 54,884 for the Dow futures, that is. Continue to see good support here around these averages, good consolidation over the last couple months, early part of this summer across each of these indexes, all followed by this nice strong breakout we saw last week, confirming some upside, and we should have a nice little uptrend shape up from this. So at the moment, continue to deploy that capital, look for deals out there. We should see this market continue to rally. It's a good time to start putting that money back to work, and we should see some more upside here throughout the rest of this summer. That's all we got for tonight. Thank you everyone for tuning in. We'll catch you guys tomorrow night for closing comments.